What's going on, guys? Welcome back to another video here. I've got another NIO update for you all this evening. We have a lot to talk about in this one, a little bit of a deeper insight into NIO's financials and kind of how they see the roadmap and the rest of the year playing out if they are going to hit those profitability goals by the end of this year. We also have some very interesting comments from NIO's CEO in a recent interview. We have a new partnership, and also, as always, we're going to be taking a little bit of a look at the chart there as well to kind of get a better picture of some of these short-term actions. So guys, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And if you never want to miss another video like this, make sure you are subscribed and turn notifications on so you're notified every time these videos go live. Also, guys, big announcement, the VIX Insight service is now live. Again, you guys might know this about me, you might not, but I've been learning about markets, how to analyze them, invest, trade, since I was 14 years old from some of the most successful people in the financial industry. I have a finance degree, but quite honestly, it's very useless in anything practical as it comes to just kind of everyday markets and investing there. And my goal has always been with this channel to help people better understand the market. So you guys are going to get weekly broad market research reports recapping everything that happened in the past week and everything to look for going forward into the next week. You guys are going to have your own group chat in there. We're going to be going back and forth. You guys have direct access to me to answer all of your questions. We're going to be doing weekly group calls where you guys, again, can have that little Q&A, direct access. We can go through the market, go through different stocks, and most importantly, single stock research reports, guys. Again, my three-pillared approach that has allowed me to kind of grow this midterm position trading account to over $250,000 here. And again, how I was able to give you guys Palantir at 15, SoFi at 655, Philip Morris at 95, Robinhood in the teens, Yin at 20. The list goes on and on, guys. It is literally only $10 a month. If you guys are interested, check out that link down below. But enough on that. Let's actually get into what we need to talk about in this video here. So again, if you guys have been paying attention to any of these videos on NIO over the last couple of weeks here that we've been talking about it, again, this area down here between about 418 and 360 is going to serve as that kind of longer term level of support here, unless something drastically changes with the company and something goes like even more wrong besides having a significant loss on their earnings. I would expect this level to hold. And again, I think a lot of people, especially if you're new to the market, are going to look at this short-term action in NIO and think to themselves, well, I just wanted this to go up in one direction and it's just going to skyrocket and it's going back to $10. And again, guys, I've outlined this many, many times that this is probably the highest risk idea that I've had over the last 2 years here. But again, with the amount of success that we've had, meaning I have not been wrong on any of the ideas that I have put out, I'm fine with taking on a little bit more risk on this idea here, and the position is sized accordingly. Remember, the whole point of this is to really see NIO turn it around by the end of this year and get a decent entry at some good risk to reward areas here. Am I looking to add to NIO right now? No, I'm kind of fully allocated to what I want to have in this position to see if they are able to deliver on their promises moving forward. If it doesn't work, it doesn't work, and that's perfectly okay to me. The position is sized accordingly, okay? So just going over the chart here again, it is possible that we get a bounce off this area here. If we end up falling down below this $4 range, I could easily see us dropping down below into the low end of this range here. And again, possible. You never know what's going to happen, but I would expect this overall range to end up holding. So moving over and taking a look at some of these comments here from William Lee, he mentioned that NIO has very strict financial discipline. I mean, I wouldn't say that, but hey, go for it, William Lee. You can say whatever you want. In the intangible asset item is just over $4 million US. This is the interesting part, though. We have expensed all research and development costs in the reporting periods and not capitalized them, which makes our accumulated losses appear higher and our assets appear lower. When you come over here, guys, and take a look at exactly what this means, capitalizing the R&D expenses is the process a business will use to classify a research and development activity as an asset rather than as an expense. So what they're able to do is they're able to move the cost of research and development from the top of the balance sheet to the bottom. When you capitalize development costs, you're doing something that can increase your company's profitability, but NIO is not doing this. So on their financials right now, having all of this research and development expense actually classified as an expense and not capitalized is making it a lot more difficult for them in the short term to show those profitability metrics. We see a lot of different situations like this. Namely, the one that people bring up a lot is stock-based compensation and how that is treated as an expense there. And if a company has a really high level of stock-based compensation, well, it's going to make it a lot more difficult for them to show profitability in their earnings. And the way that NIO has been classifying their research and development expenses has not helped them out. And if we take a look over here, research and development just in the fourth quarter was about $500 million. And when we take a look at what NIO's loss was, it was about $900 million in Q4. So 500 million of that $900 million of losses is kind of being shown in that research and development there, even though that's not technically a loss. They can return a decent amount of that money back and get somewhat of a return on that investment there. And William Li has said that this lays a good foundation in achieving profitability for the future because the investment has been completed in the past, a sunk cost, and the next step is to enter the harvest period, basically getting a return on that investment. So guys, let's shift our focus a bit here and start getting into this interview that William Li just did, and again, see what insights we can gain from kind of how NIO and the upper management kind of view their path into the end of the year 2025 here. So moving over here, when we take a look at this first question, how to break down the goal of doubling sales, NIO sold 200,000 units last year and has 6 new models this year. So there's room for sales growth. The L60's rebound will greatly impact the full year sales. Sales will rise steadily in April and May as production ramps up and brand momentum recovers. Now, I would take that statement there, guys, with a giant grain of salt. The main thing that you always have to focus in on with NIO and anything that is said by their management is, okay, that's great, but we need to see results. And this entire kind of investment thesis that I have is all based on if they can generate results or not. It's very, very, very simple. Just based on what the CEO says here is really not going to change anything for me because of what they've done in the past. Overpromise, underdeliver. But with that being said, having all of these sub-brands and these new models can definitely lead to increased sales growth and increased sales numbers this year. And again, as they said down below, as for the Firefly, it all depends on our pricing. Guys, this is something that I have talked about many, many, many times on this channel here, that in this global environment right now, the global macroeconomic environment, it is very, very difficult for the average citizen to justify the purchase of one of these luxury, inexpensive electric vehicle models. The fact that NIO is getting into this mass market business, again, is a great way to get some people into their pipeline, which I think is a really, really solid step in the right direction. But again, you have to focus on results, not just talk. So moving on a little bit further here, guys, it gets very interesting as we get a little deeper in here. What other areas do you expect to achieve effective cost reduction this year, apart from R&D and battery swapping? Costs mainly depend on where money is spent. Obviously, for intelligent electric vehicles, there are 3 key areas. Intelligentization, that's an interesting word right there. This is achieved through chips and more integrated designs. More on chips in a second. This year, whether it's the 25, 5566 models or other vehicles, each car can save 10,000 to 15,000 won compared to before, resulting in significant annual savings. Electrification primarily focuses on batteries. Last year, we achieved some cost reductions, and this year, we believe there is still potential. A reduction of 3,000 to 5,000 won per battery pack can save hundreds of millions. And then whole vehicle as well, closely related to scale. For example, the vehicle base and other whole vehicle related aspects are greatly influenced by product definition. This part is challenging, but can be optimized through scaling up. They're effectively talking about economies of scale here. When they're able to sell more products, their margins can rise just based on economies of scale there, being able to scale up, and overall costs are going to decrease as you're able to produce more products. So this right here is where we get into something pretty interesting that I think we should talk about, because I think it's going to start circulating a lot more on the internet here, and I want to make sure that you guys have kind of the proper expectations when you start to hear things like this. So in terms of performance, can NIO's self-developed chips serve as a direct substitute for NVIDIA's Thorax series chips? Are they compatible with smart cars at the level L4 or above? If NIO's chips achieve large-scale mass production, apart from self-use, is there a possibility of supplying them to other companies to become a business highlight? So Our chip can fully replace NVIDIA's Thor and is even superior in some aspects. It is the world's first automotive qualified 5nm intelligent driving chip with precise and advanced performance. We will definitely use this chip in our own products first. If other companies are willing to use it, we are also open to cooperation. So, what is effectively being hinted at here is potentially another giant source of revenue for NIO. Now, a lot of people are going to look at this and kind of start straying away from kind of what NIO is, as it just basically it's a car company, guys. It's like when people talk about Tesla and they say, oh, Tesla's not a car company. It's a AI company. It's a technology company. It's like, oh, really? Then why do the vast majority of the revenues come from cars? The other thing that's interesting to note here, guys, is that NIO isn't the only game in town. When we come over and take a look at this, BYD is reportedly developing its own smart driving chip. This happened last November. And you also have one of NIO's competitors, XPeng, in the Chinese market, have also announced that their in-house design auto chips are ready for production. So, in order for this to become a massive revenue generating endeavor for NIO, their chips would have to be so far above and beyond what all of these other companies are doing, because again, everybody is going to be spending a lot of this money on the research and development of these chips. And if in that case that it is more cost effective for everybody and more efficient for their business, and also their vehicles, more effective for all of their vehicles, to then go with the NIO one versus developing this themselves, maybe. But I want you guys to realize that, again, in order for NIO to deliver in the future, they're not going to just start becoming like the next NVIDIA for cars, guys. Like, you have to focus on the core competency of what NIO is actually good at, or really what they set out to do, and that's to be an electric vehicle car company. So just keep that in mind. I don't want anybody kind of coming in here and saying, oh, NIO's going to be the next NVIDIA and it's going to run to some crazy market cap. Guys, again, keep your expectations in check and focus on what actually matters, and it's NIO taking steps towards profitability and making sure they are cutting costs while also having really strong rollouts of these new models, and also continuing to deliver more vehicles. And guys, the last thing that I want to talk about with you guys here before we wrap up this video is one of NIO's new partnerships. NIO signs a deal with Beijing state-owned firm to build 100 swap stations. This is the second partnership that NIO has announced with state-owned enterprises to build 100 battery swap stations. Again, just last week, we saw that they reached a strategic cooperation with CATL on battery swap to build the world's largest battery swap network. So again, having these state-owned enterprises on NIO's side and supporting these business endeavors is definitely a good thing. I just wanted to touch on that at the end of this video here, so it was in it and so that you guys were made aware. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. Cost you nothing to do it. And for those of you guys that are joining VIX Insights, welcome. That is going to be the best $10 that you guys have ever spent. Again, for those of you guys that are interested, the link is down below there. It literally comes out to 33 cents a day. We are starting the market research reports this Sunday, and then those Q&A sessions are going to go live next Wednesday there. So I will see you guys in the next one, guys. Peace.